Hello, 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 Mr. Marty Bent. We are live. I appreciate it. And I was telling the community a little bit earlier today how this even came about. And honestly, I want to start this off by just saying thank you, because early this morning, I was getting bombarded with the unfortunate news about Voyager Chapter 11 bankruptcy protection. And then it became one of those things where, like, I'm not a lawyer. I'm not that much of a crypto business expert. I don't know what all this means. And I know it's one of those days where there's just going to be an infinite amount of questions, and rightfully so. There's a lot of people who are scared about what the hell this all means. So the fact that I think I found out at like 6 in the morning, and then you and I were talking by like 8, and you're like, yeah, I'll come on today. Like, seriously, thank you so, so much. So everyone who you're seeing right now, this is Marty Bent. Just if you want to quickly call out your Twitter so people have the time to like kind of see what you're all about.
Yeah, my handle on Twitter is at Marty Bent. That's where I hang out a lot. And yeah, so a little bit about myself. I run a media company, tftc.io, that's focused on Bitcoin and freedom in the digital age. And then I'm also a venture partner at a venture capitalist fund dedicated to investing in the Bitcoin space. And I do some Bitcoin mining on top of all that as well.
Yeah, I was just going to say at the end there, I think there's a couple Bitcoin mining companies, maybe some name changes, but overall, so Bitcoin media company, Bitcoin investing venture firm, and then also just core Bitcoin businesses and crypto businesses in the world of Bitcoin mining. So I think it's safe to say that you spend quite a few hours of your day paying attention to what's going on in the crypto sphere. And for all of us who have been doing that, recently, hey, at first it clearly wasn't fun from November till recently, just when things were coming down. But now it's taking on a whole more painful turn when you're seeing the stories of Celsius and Babel and Vald, and now the newest one is Voyager. And before that, I mean, all companies were cutting, like crypto.com, Gemini, Coinbase. Like, clearly the writing was on the wall, but I think myself included, and probably many of the people listening, is like, we get it, it's bad, it's a downtrend. Once the Fed figures out their stuff, we'll kind of bottom and come back up from there. But now it's taking on like a really, really awful turn. And I think to a lot of people, particularly watching this, it's the people who are experiencing the pain of Voyager. So maybe for people who don't know what's going on with Voyager, could you quickly summarize that?
Yeah, so earlier today, Voyager declared bankruptcy, Chapter 11 bankruptcy, which means they're going to begin restructuring their debt and their company. And essentially what led to them having to go and file Chapter 11 bankruptcy was the fact that they issued a $670 million loan to a firm known as Three Arrows Capital. And it wasn't only a $670 million loan, it was unsecured. So Three Arrows Capital didn't have to put up any collateral or assets in return for the loan. The loan was broken down, I believe, $350 million of USDC, which is a stable coin run and operated by Circle. And then I believe about 15,000 Bitcoin or 1,500. The rest of the $320 million were paid out in Bitcoin. And so essentially what happened there, Voyager is a firm similar to BlockFi or Celsius, which says, hey, give me your Bitcoin and I'll give you yield back. In the way that these firms typically get the yield or try to get the yield, it's becoming glaringly obvious that they're not able to get the yield, is what they'll do is they'll take your Bitcoin and then they'll lend it out to people who are speculating in markets. And in this case, it was Three Arrows Capital, who took $670 million again of USDC and Bitcoin from Voyager. Voyager didn't ask for any collateral for that loan. They basically gave it to sorry, somebody called me a signal. Gave it to Three Arrows and said, hey, we think you guys are really good at investing. We believe that you're going to go and get a yield on this loan that we're giving you, and then we'll be able to give our customers a little bit of yield on their deposits. That turned out not to be the case. Three Arrows Capital turned out not to really be as reputable and savvy as they portrayed themselves as. They went and they speculated in highly speculative cryptocurrency schemes, like Terra Luna being probably the most speculative and one of the massive blowups that happened earlier this year that has created a cascading contagion throughout the overall Bitcoin and crypto ecosystem. So essentially what happened to Voyager is they made a bad loan. They should have securitized the loan. to some degree. They should have asked for some collateral, some assets in case 3 Arrows Capital went and took that money and lost it, which is exactly what they did. And so what you find is that Voyager, and by proxy their customers, are left holding the bag. So 3 Arrows Capital took that $670 million and essentially set it on fire.
Man. I think one part of confusion there could be, say I sign up for a Voyager account and I put $1,000 in there. Unfortunately, I put more in there, and I buy $1,000 of Bitcoin. So my assumption was, okay, they go out and they buy $1,000 of Bitcoin. How is that actually working in reality, where if we're giving them some money, it feels like they're almost playing with clients' money, and too much of that went to 3AC or other bets that didn't end up panning out. But when I thought I was purchasing something, was I actually purchasing that thing, or was it like a percentage? How did that all pan out?
Yeah, so you basically are an unsecured creditor that owes an IOU. So until you actually take possession of the Bitcoin by moving it off of Voyager or BlockFi or Celsius, you actually don't own any Bitcoin. You own a claim to Bitcoin that may or may not be there in the future. And in the case of Celsius, in Voyager specifically, it's proving not to be there. And so this is why in the Bitcoin world, you'll often see the meme, not your keys, not your coins. And so this is a lesson that's been learned many times throughout the first 13 years of Bitcoin's history, most famously with Mt. Gox in 2013, 2014. They lost 750,000 Bitcoin. And anybody that had Bitcoin on that exchange has been locked up in a bankruptcy proceeding for going on the better part of a decade now. And so, yeah, when you do engage in these third-party custodians who, whether it be a Coinbase or a Celsius or a Voyager, you really don't own the Bitcoin until you move it off the exchange. And so that is the lesson that is being learned again with the blow-ups of Celsius and Voyager at the moment, is you really only have an IOU if you're holding Bitcoin on an exchange.
And I'm assuming that's exactly why there is that when you try to withdraw, they're like, oh, your withdrawal will be approved in 24 hours, because it sounds like they had to go back out to whoever had their money, which is your money, to like actually fulfill that. So there's no laws or regulations at all on like the percentage that they have to have? Because it seems like maybe I need to dive a little bit more into the numbers, but it seems like whatever we thought they were owning, it was a high percentage of that fancy IOU and not them actually going out and buying the digital asset.
Well, they probably did buy the asset at the end of the day. And I don't know how fractionally reserved they are. I think a lot of these services and exchanges are fractionally reserved. However, at the end of the day, 3 Arrows Capital did get Bitcoin. They just went and speculated with it and lost it on those bets. And so, yeah, I bet there's a combination of fully reserved and fractionally reserved custodial services out there. I would run with the assumption that they're all fractionally reserved. And going back to your original question, is there any laws or regulations against this? Like, no, I mean, I think, and this is for the broader financial system, not just Bitcoin, in the crypto ecosystem. I mean, the Fed in March or April of 2020 completely eliminated the reserve ratio requirements for banks. And I think that reserve ratio, it can be extended to other services.
Wait, sorry to interrupt, but like US fiat currency ones don't even have that ratio. The Fed got rid of it. Am I understanding that right?
Oh, yes. It was, I believe it's 10% reserve ratio requirement before the money printer went on after COVID. And in the midst of all that facility changing that the Federal Reserve did in April to allow BlackRock to help out with their bond purchase facilities and other things, one of the things that they changed as well was the reserve requirements. There is no reserve requirement for Federal Reserve member banks at the moment.
So in those big fancy schmancy banks, if you give them $1, before they had to at least have 10 cents there, and which already seems clearly low, and they're like, nah, never mind, we don't need that anymore even.
Yeah, no, it's all Ponzi scheme.
That's such bullshit. All right, that's wild. Before we go too far off, I think like one active thing that probably is on their mind is, you're saying, I like the saying, not your keys, not your coin. Are there particular, whether cold storage or not, where you would recommend people getting storage? Like, is there something that you trust in to put your crypto?
Yes, I mean there's a number of options. It's a pretty daunting task to a lot of people, but once you, I like to say, practice makes perfect as well. So my recommendation is usually to start with a mobile wallet, something like Blue Wallet, Moon Wallet, or Samurai Wallet. Um, Moon Wallet being MUUN. These are good ways to practice. They teach you how to create private public key pairs and get you comfortable with securing your seed phrase. So writing down 12 or 24 words, making sure that you secure those. And then what you do is you send 10, $20 from the exchange to the mobile wallet, and you get comfortable with the UX flow of Bitcoin addresses and invoices and stuff like that. And then if you have a considerable amount of money, then you should start exploring hardware wallets like Trezor, Cold Card, Ledger, all reputable. I mean, Cold Card is Bitcoin only. Trezor has Bitcoin only options. Ledger has a bunch of cryptocurrencies as well. But then there are also services that allow you to do a collaborative custody model where Bitcoin, via its native properties, enables you to have what's called a multi-signature wallet, which basically mandates that if you want to move your Bitcoin, you need M of N signatures, so 2 of 3 signatures to actually move the Bitcoin. So there's services like Unchained Capital and Casa, which allow you to basically set up a multi-sig account where you'll hold 2 keys and Unchained will hold 1 key. And when you need to move your Bitcoin, you can move it yourself if you have your 2 keys, or if you want somebody to hold your hand, Unchained is there to help you and to sign the transaction as well. So yeah, it's Bitcoin is an alien technology. It's only 13 years old. It really demands extreme ownership, and that people get comfortable with the concept of private public key pairs and holding their own assets. That's the key innovation of Bitcoin in the digital age. It's the first ever truly scarce digital bearer asset. So that's why they call it digital cash. Cash is a bearer instrument, meaning you bear it, you hold it physically. With Bitcoin, it's a digital bearer instrument, meaning that when you hold your private keys, you actually own your Bitcoin and you bear that instrument in your hand and you control it. And that's why many people don't recommend that you hold your Bitcoin on exchanges like Coinbase or services like Celsius or BlockFi or Voyager, because at the end of the day, there's only 21 million Bitcoin. And if those services go and take undue risk, which they have been doing, and they get caught on that, you're going to think that you have $1,000 worth of Bitcoin in your account, but really, yeah, you don't have anything, and you're going to get locked up in this bankruptcy proceeding for probably years, and at the end of the day, get a massive haircut on anything that you did hold on the exchange.
Man, I think you're bringing up some good points. If you're watching this, I'll make sure to get some of those links to what he was referring to in the description below. Talking about this haircut, I think right now, for the main question, the golden question is, how bad is it going to get? What's going on? Will I ever get anything back? And let's make it clear that right now this is conjecture. It just came out this morning. We know about Chapter 11. And I was reading some of the filings and like, well, we'll try to get you some of your crypto, some equity in the new company that'll come from the reconstruction of it, and then maybe some Voyager coins, something like that. How do you see this going? Maybe if you want to give us the good, the bad, the ugly, that type of a scenario. But like, if you had to bet on how this will end up playing out, you just alluded to it taking potentially years. So let's say we get to the end of that time frame. When the dust settles, where do you think we're going to be?
Yeah, it really depends on a number of factors. So again, going back to Mt. Gox, that is one of the most famous blowups in Bitcoin's history. They've been in bankruptcy proceedings in Japan since 2014, and it's still up in the air as to when the creditors of Mt. Gox are going to get any of their money back. With Mt. Gox specifically, the fund that is handling the bankruptcy actually did some active management and traded some Bitcoin, and they've actually, I think, actually made customers some money in US dollar terms over the course. So customers will get paid back, I believe, in dollars at the end of the day at Mt. Gox, and they may be made whole in dollar terms, but not in Bitcoin terms. Back when Mt. Gox blew up, Bitcoin was trading around $1,100, and obviously now it's almost 20x that. Yeah. So your dollars you'll get all those back, but you're not going to get as many Bitcoin as you held on the exchange. Another example of customers being made whole is Bitfinex. In November of 2016, they got hacked and lost 115,000 Bitcoin. Around when the price was 600, they did some token scheme where they spun up like a Bitfinex token, and their customers got access to that, and then eventually via that token offering and the company surviving and still providing services profitably was able to make their customers whole. So that's an example of a company actually losing a considerable amount of Bitcoin and being able to make all their customers whole, even though a lot of their customers wound up selling that token that they spun up at a loss. So really the people who were made whole were the speculators who were taking on that token risk. And so unless you're confident that if Voyager does something similar, unless you're confident in their ability to run a profitable business and actually attain enough profit to not only make people whole, but continue to operate successfully into the future, it's probably not going to be as successful as Bitfinex, because that's the one thing. Bitfinex was just running like a pure Bitcoin exchange where the business model is very straightforward and it's relatively de-risked, where when it comes to like a Voyager or Celsius, as we've described, what they're doing on the back end with their customers' Bitcoin is extremely risky. And so I think for Voyager specifically moving forward, it's going to be really hard to maintain a reputation or even get their reputation back. And I think people are just going to avoid these types of service, or they're going to be more likely to avoid these types of services moving forward as the market becomes more aware of the risks that exist on the back end. So I'm under the impression that it's going to be very hard for Voyager to recover its reputation and therefore run a profitable business that would allow them to make their customers whole.
Man, I mean, I guess it's one of those things it's painful to say, it's painful to hear, but I wholeheartedly believe when it comes to the world of finance and money, it's one of those things where try to put your emotion aside. Like we need truths like that. So you're under the impression that it's not necessarily going to zero, but a pretty serious haircut will most likely be involved. And on top of that, the dust isn't going to most likely settle for a couple of years. And once again, this is conjecture. You're not saying like legally this is how it has to go, but you're thinking that's the odds of the situation.
Yeah. I'm not a lawyer. None of this is investment advice, but just having seen these types of blowups throughout Bitcoin's history and understanding the nature of Voyager's business. And I mean, just look at the fact that they issued a $670 million loan to an obscure fund out of Singapore with no collateral in the loan. I mean, that alone should really highlights the incompetence of the Voyager management team. That I do have a background in fund management, and putting that much value at risk with no collateral put up by the counterparty is extremely it's the word I'm looking for, irresponsible. Where it's the due diligence that went into a $670 million transaction seems to have been extremely subpar in this case.
I mean, obviously, myself, I'm sure a lot of people listening right now, like it's just painful because you're coming to the reckoning that like maybe all, but at least a decent chunk of our money that was invested with this is going to the wayside. And it's just frustrating. And I think it's natural. You're angry, you're upset. A lot of people had like a lot of their money in here, and my heart truly goes out to them. It's painful. This sucks. Like I'm right there. If you guys are listening to this and you're like, dude, I'm out money, I'm sitting in that, like that shit train right there with you. Then it comes to that point of anger of like, I don't know, is this somehow maybe not fraud, but is this like against a fiduciary responsibility? Like, or like, I feel like with that money in between, and you're saying it was obscure, and like, I guess it's a two-part question. Is there somehow a breaking of the law with not following the fiduciary responsibility for not doing the DD? And then on top of that, the onus on us as the person using Voyager. Was this public information that we just didn't want to look into or didn't have enough time to look into it? Was it out there? Like, should we have been like, dude, this is awful. Like, look at what they just did. Or was this not even public?
Well, that's a good question because Voyager is a publicly traded company, I believe. So I would imagine at least their balance sheet and income statement, they'd have to file quarterly reports and updates on the state of their balance sheet, and they may not have to be too specific with issuing a $670 million loan to 3 Hours Capital specifically, but you should be able to suss out, via the financials that they were issuing these types of loans, I would imagine. Again, I'm not an expert. And in terms of like fiduciary responsibility, I guess that is a bit of a gray area considering the regulatory uncertainty that exists in the world of Bitcoin and the overarching crypto space. It's a bit opaque. There's the CFTC thinks they can regulate, the SEC thinks they can regulate, the Treasury thinks they can regulate it. And so there's the regulatory gray area where there's unfortunately not really any cut and clear rules. They would have to apply rules from other sectors of the economy to Voyager, I would imagine. And again, not an expert, so not exactly sure how that would apply to Voyager. At the end of the day, just having seen a bunch of these blowups, like I would be highly skeptical that anybody from Voyager will be going to jail or there'll be any fines. I think it'll just be explained away like, hey, Voyager and its customers took an undue risk. And I would imagine, again, going back to the point that any customer of Voyager that believes that they have Bitcoin, at the end of the day, if you read the fine print, you're defined as an unsecured creditor. So if you read the fine print, I think that would be able to make them get out of the scot-free from a legal perspective, because in the legal print, it's like, hey, if you read the terms of service, you would understand that you're unsecured creditor that has the risk of losing his or her money.
Yes, it's just ridiculous. Correct me if I'm wrong. The last thing really about Voyager here, did FTX just get horribly burned on this deal? I saw something about the filing, and there was an unsecured loan from Alameda, so not FTX, excuse me, from Alameda, which is related to FTX. Alameda to Voyager, 75 million. Did that just like Thanos snap and disappear?
I don't know for sure, but I would imagine. But I would imagine it did if they're filing for bankruptcy. I believe that Alameda. So yeah, Alameda is in the FTX umbrella. I believe it's the venture capital arm of the FTX family. And if I understand correctly, FTX has attempted to step in throughout all this contagion going on throughout the Bitcoin markets and be the lender of last resort. They issued a $450 million revolving line of credit to BlockFi, and have essentially have the right to acquire that business. And I think they essentially bought BlockFi to backstop losses there and prevent it from going under. I think they tried to do something similarly with Voyager via a $75 million line of credit. However, that $75 million was it was like trying to put a Band-Aid on like a bullet wound. The amount of money that Voyager lost was simply too much to overcome, and $75 million wasn't really going to help the situation. Again, when you compare Voyager, which has gone under and filed bankruptcy, to something like BlockFi, which has gotten very close but didn't. BlockFi did lend to 3 Hours Capital as well, but they were wise enough to ensure that 3 Hours put up some collateral for that loan, whereas Voyager was running naked with that loan. And this is not an endorsement of BlockFi or what they do as well. I do not recommend any of these services to individuals at the end of the day, because again, you can't quantify the risk that's being taken on the back end as they're lending this Bitcoin out. And as we're finding, a lot of these obscure DeFi crypto protocols are what many in traditional finance would define as far out on the risk curve. And so when you have the Fed tightening monetary policy and raising rates, what you're going to see is a liquidation of the highest risk assets, which in this world is the Terra Lunas of the world. And I think that's the driving force behind all of this, which is really showing who's running around naked, is the fact that the Fed raised rates earlier this year, and then you had a de-risking throughout the markets as people tried to unwind some trades they had further out in the risk curve. Again, Terra being probably the furthest out there, and that crumbled, and that led to a contagion event where people who had their Bitcoin up and levered in these obscure products were getting called and having to sell their Bitcoin to pay back their loans, and sell potentially, in this case, Voyager customer Bitcoin to pay back their loans at the end of the day.
It's just wild. I just don't understand who is the marketing mastermind at 3AC to get all these other ones to invest in them. You're saying it was a little bit more obscure, a little bit more unproven, and yet we're talking about Voyager, BlockFi, and I'm sure the list goes on of other ones that are going to get caught up in the particular 3AC like debacle, contagion, blow up, whatever you want to call it. And I don't know, that it's literally some guy, I don't know if it's sociopathic or just amazingly good at spinning words, but whoever got the 3AC guy, that guy, he talked a lot of people into this. That's nuts. It's crazy.
Yeah, it was two gentlemen, two classmates, Suzu and Kyle Davies. I believe they're from Connecticut originally. But yeah, I mean, I've been familiar with those two for years now. They're vaunted as thought leaders in the space of cryptocurrency, and I think everybody thought 3 Arrows Capital was like a AAA rated, highest caliber fund in the space. And I think really what happened is, again, going back to Fed policy and the exuberance of the last decade, or the decade leading up, or a decade plus after 2008, is I think that everybody, including Suzu and Kyle, I bet they believed that they were smarter than everybody else, but I think they were just benefiting from the gravy train of the money printer. And as soon as that money printer got turned off, you really realized what has value at the end of the day. And a lot of these speculative DeFi protocols and lending protocols turned out to be highly speculative. They did make some people a lot of money for a short period of time, but again, I think that was being induced by the Fed and central banks around the world flooding markets with overall liquidity, and it was just looking for somewhere to go.
I think you've brought up some really good points of like, all right, there's lending protocols, they didn't work out. Obviously, own your own crypto. It's not worth whatever API is allegedly being pitched to us. Those are all awesome. But if we were to bring this conversation to the bigger level, I'm sure there's now people who are like, okay, maybe you did dodge the Voyager, the Celsius one. Maybe you got hit. I don't know. I hope you dodged it. But I'm sure there's people who are like, well, hang on, should I be in crypto at all? I'm sure the media, the headlines between Terra Luna, Celsius, Voyager now, like all of this stuff going on, and also the pain in the equities markets, I'm sure people are questioning, should I just cut my losses, lock in my gains, just end this situation, get off this roller coaster? So on the general level, where are your thoughts on like crypto? And if you want to be specific with Bitcoin, feel free. But like, how are you viewing this situation, especially because you were alluding to the Fed and the interest rates and all that good stuff?
Yeah. So I am a Bitcoin only guy. I don't recommend anything outside of Bitcoin in the crypto space. I think it's highly speculative. I think everything outside of Bitcoin is an affinity scam. A lot of people would consider that to be somewhat of an extreme view, but having been around the space since 2013 and seen everything under the sun in terms of the next Bitcoin and innovation, it's pretty clear to me that Bitcoin is the only cryptocurrency that's worth paying attention to. And again, this is an investment advice, but if you're going to invest in quote unquote crypto, I would stick to Bitcoin and Bitcoin only. And that is because and bringing it back to the Fed and the overarching macro environment, something I say on my podcast and in my newsletter a lot is fix the money, fix the world. We live in a society where money is completely broken. We've broken the money via the central banking system. And the only way that we're going to correct the exuberance and the misallocation of capital that exists in our world today is if we fix the money. Money is the most important tool that we use as humans. It is the pricing mechanism that basically dictates how people coordinate throughout an economy. And when you break that tool, that most important tool, what you have is a serious disconnection between reality and what you see in the markets. And that's the world we live in today. With the energy, the misallocation in the energy sector, that's leading us to an energy crisis, the misallocation in the food sector that's leading us to a food crisis, the misallocation in the financial sector that's driving the gap between the rich and the poor due to the canteen effect. This is all stemming from the fact that we've broken the money. And so when you look at the overarching space or the macro landscape, the Fed is backed into court. The Fed is fucked. Excuse my language. They're out of bullets in terms of what they can do from a monetary policy perspective. They're right now particularly between a rock and a hard place with stagflation looming over them because essentially what they're finding is, and Jerome Powell's starting to admit this, is you can't print money or you can't print money to fix an inflation problem. And more importantly, right now, you can't tighten monetary policy to fix an attempt to stop inflation when the problem that's driving inflation right now is supply chains. So the Fed thinks that by reducing the amount of base money in the system and raising rates on the cost of capital, that they're going to somehow induce deflation, bring inflation back towards their 2% target. But that's not going to work because supply chains are broken. Raising rates does not produce oil refineries. It does not produce pipelines. It does not produce nuclear facilities. And so what we're seeing now is the Fed's raising rates with the expectation that inflation is going to come down significantly. But really what they're doing is just exacerbating the problem because they're raising the cost of capital on the necessary infrastructure projects that would actually prevent or provide the market with supply that would bring down prices. And this has been an ongoing problem that's been playing out over the last 50 years since we officially went off the gold standard. So the Fed is going to find itself in a situation, I believe, at the end of the summer where food prices are still going up, gas prices are still going up, even though we have a temporary lull with oil prices going below 100 here today. But I don't think we've seen the last of energy price rises. So we're going to be at a point at the end of the summer where inflation's still relatively elevated and the raising of rates has not materially affected inflation, and they're going to have to revert course and start printing money again, which gets us right back to where we started, where inflation is everywhere and always a monetary phenomenon. Like you can't print your way out of the problem of money printing. And so long-winded answer, but Bitcoin, I believe, is a solution to this, where you have a distributed peer-to-peer cash system that has a hard supply of 21 million, and there is no central planner that can really perturb that system. So that long-winded answer can be more succinctly distilled into the fact that monetary systems, economies, they're complex systems, and you just use the heuristic that you can't centrally control a complex system. You can't have a few individuals try to basically manufacture a complex system. It doesn't work. It's not how nature works. It's not how humans work. It's not how coordination works. And so when it comes to money, that's why it's broken. That's why we're seeing the disparities throughout the global economy and the supply chain disruptions. You have central planners and government and central banking trying to manipulate and granularly control these complex systems. I think the answer to the central planners trying to centrally control these complex systems is to allow a grassroots, truly emergent system to take its place. And that's exactly what Bitcoin is. Bitcoin is an emergent peer-to-peer system. It is controlled by tens of thousands of individuals downloading the code and running the rules and checking the rules and validating transactions, and individual actors buying ASIC computers and plugging them in to contribute to the ordering of transactions and the dispersion of the Bitcoin supply. So yes, I believe that Bitcoin is the solution to the money problem we have. When it comes to anybody who's looking like investing in crypto, I highly recommend that you stay away from all the altcoins and the DeFi shit that's out there. I think they're siren calls that are attempting to pull Ulysses into the water and eat them alive. It's just, I mean, these these yield schemes are a perfect example of it. It's like a lot of people who are locked up in Celsius and BlockFi and Voyager. It really doesn't make any sense. You're risking the scarcest asset in the world, Bitcoin, for 6% yield, when if Bitcoin continues to do what it has done in the past, which I think it will, because it has inherent utility and fundamental value in its peer-to-peer nature, and the fact that it allows you to make transactions that despotic governments don't want you to make. I think people are only going to recognize that fundamental utility, and therefore demand will rise. And the concept of locking your Bitcoin up on a centralized custodian is going to take risk with it to get 6% yield back, when Bitcoin has a compound annual growth rate over the last decade of 200%. Just as it's too much risk that you're picking up pennies to get steamrolled in front of a steamroller. So yeah, I'm sort of rambling right now,
No,
but
you're all
long
good.
story
Yeah, no.
short, the money's broken. I think Bitcoin fixes it. Bitcoin often gets lumped in with the crypto yield seeking blow ups that happen. But I think it's very important for your audience and anybody listening to this to understand that there is a clear delineation between Bitcoin and the grift that is crypto.
I, so for me, I do own a myriad of different coins and tokens. But one thing I want to point out, and this is so my comeuppance was much more through the ape community, but in terms of like GameStop and AMC, and in between those happening, particularly the GME event in January, the AMC event in June, that was actually Doge. And like you were kind of saying with the siren call, it was just ripping, and it was fun. Like it was part of a community, and I think there were some valid parts there. But because of that, I think people became hyper focused on the SEC and what is the SEC doing or not doing. And one thing that we came out maybe a month ago, Gary Gensler was really doubling down on most likely everything but Bitcoin is a security. Like he said that he went out of his way to say Bitcoin is a commodity. So with me and like my other investments, it does make me nervous that they're going to crush them and say, nope, they're all security. So I think that's something we'll see how the SEC decides to play it out. I mean, obviously the SEC moves very, very slowly. I mean, a lot of the people listening to this, they still want to know clarity on what's going on with Citadel and Virtu and market making, which I'm sure you're familiar with Citadel because they're trying to become market makers now with crypto. But in terms of just like, if we're asking like, okay, a safe thing to store your money, there is a chance that the SEC crushes everything else besides Bitcoin. That's the only one that they're like, you know what? It's actually good. And I know the Ripple case is ongoing and their legal team has some victories here and there, and we'll see how it ends up playing out. But just in terms of risk, like these are things that just at least have to be considered. Obviously, neither of us are financial advisors. Do what you want with your money, but it's on us to at least point these things out to you.
Yeah. Gary Gensler and the SEC could definitely come down. I mean, there's I mean, we can use Ethereum as the base case for that too. I mean, Ethereum it pretty clearly was an illegal securities offering when you consider the pre-mine, how they were pitching it to investors, the language that Vitalik Buterin and Joe Lubin were using in terms of returns that would be provided on top of the ETH token. However, a couple of things here. I don't think you should depend, like, the SEC certainly could turn a blind eye. There's been some comments they made in the past where they said Ethereum's okay, but like, again, at the end of the day, that doesn't really matter to me, at least. Again, we need to fix the money and think that's the really, like you mentioned, GameStop, Bored Apes, Doge, all these things. People trying to make a yield that is above inflation so that they can just either stay afloat or get ahead in the game. And this is indicative, again, that the money is broken. Like, people need to realize and take a step back, read some history books. In the long scheme of history, we live in a historical anomaly of the way we run our monetary systems. And like historically throughout humanity's history, like there have been saving vehicles where people can just work and actually save money in a monetary good and not have to worry about going to buy Doge or buy Bored Apes or get into some DeFi scheme to make a crazy yield on their savings. Like that is how broken the money is that it is normal for people to think that this is how they need to either develop a nest egg or just keep a nest egg. And that's what Bitcoin aims to fix, is like, hey, we're going to provide you, you don't have to worry about all these DeFi schemes and all these yield chasing mechanisms. You can just save your money in Bitcoin, and over the long term, your purchasing power is going to at least remain stable, and if not increase significantly, so that you can save money and just focus on what you do best, which is be productive throughout the economy. And that's where I think we're still learning this lesson as we still live in the reality of the fiat monetary system that really incentivizes this mad dash for yield, because people simply want to be able to maintain purchasing power over time, as the Fed is printing money and inflating prices of everything that we touch, whether it be education, healthcare, food, energy. It's not the way the world should work. It's not the way money should work. And humanity is still learning that lesson today.
Man, I really like, I think you're the first person to put it that way, because we are talking about things like you alluded to, Bored Ape, Doge, Shiba, they all went crazy. Why was Terra attractive? Why was AMC, GME? And you're really the first person that I've heard articulate it that way. Like, let's take the question even earlier of why are people feeling the pressure to take even interest in those types of things. And it kind of shows you, like you alluded to, between our food, our energy, of just our schooling, our healthcare, of how messed up things have been. And people get the pressure to take that risk where they're potentially taking the risk and not even knowing the risk involved. They're signing up for Voyager or Celsius, not understanding the true risk profile. They think it's relatively safe because that's the verbiage, that's the copyright. But in reality, it's the complete other end of the spectrum where it's a high risk. And I'm sure people like you would actually argue, you're probably surprised that it even lasted as long as it did, but it quickly came undone as soon as the Fed switched its tune. No, I've never thought of it that way. And I do appreciate you sharing that. As one final question, right now, obviously, you love Bitcoin. You're invested in Bitcoin. You're, I'm assuming, a very long-term, like probably along the lines of trying to pass it down to your family. You also alluded to the end of the summer and Fed and all that stuff. So I get it. You're invested in Bitcoin. You love it. But are you dollar cost averaging at this level? Or do you think there's still a little bit more pain in BTC and you're waiting to dollar cost average a bit lower than the current price of roughly-ish 20-ish K?
Again, I don't try to predict price. I've tried to do that in the past. It could certainly go lower. Certainly could not. That's on our show, Rabbit Hole Recap, one of the podcasts I do. My co-host Matt Odell has been saying for years, just stay humble and stack sats. So a lot of my company revenue is in Bitcoin. So I'm still invoicing in Bitcoin month in and month out. I have excess cash. I dump it into Bitcoin as well. I'm always in a accumulate as many sats as possible mode. A Satoshi, a sat, is the smallest denomination of a Bitcoin. And yeah, so I'll continue to be invoicing a Bitcoin and buying Bitcoin throughout the summer, regardless if the price goes lower or higher. If it goes lower and I'm able to stack more sats, I'll be happy. I won't depend on that, but yeah, I mean, in the context of Fed policy and Bitcoin's existence in regards to that policy, I mean, the dollar system is when you count like credit exposure, hundreds of trillions of dollars of an ocean, and Bitcoin right now is a $350 billion market cap, I believe, or around 400 billion. So in the context of Bitcoin compared to the dollar system, Bitcoin's a gnat on the elephant's ass, where if the elephant moves a lot, the gnat could be affected. But again, I think this is just a product of the nations of Bitcoin and where it is in its overall history, which I think will be a very long one. And so, yeah, I see it as an opportunity if it does go lower to stack more sats. But yeah, I think if the Fed continues to raise rates and you have these contagion events continue where you have people delevering to get more dollars as interest rate goes up a lot. If there's a lot of leverage in the Bitcoin system still, there could be more sell-offs. But I do think with Celsius, Terra, Three Arrows, and Voyager now, a lot of these blow-ups happening, and we're seeing a lot of miners sell Bitcoin en masse in the last couple of weeks. I'm actually relatively surprised that the price has held up this well, considering all of that. And so I do think that the Bitcoin ecosystem is significantly delevered compared to where it was earlier this year. Again, I don't make any price predictions. It could certainly go lower. It could stay even. It could go higher. The goal should always be just to stack as many sats as possible in my mind.
I love it. Well, thank you for your insights, and I truly appreciate your time. We put this together at the last second, and honestly, this was a wealth of information. What is your Twitter? What's the best way for people to reach out to you? What's the name of your podcast? I'm sure you've prompted other people to be more interested in your thoughts and opinions, so I just want to send them to the right place.
Yeah, so at Marty Bent is my Twitter. TFTC.io is my website. You can find my newsletter and my podcast there. And I highly recommend, if you want to get a better, well-rounded understanding of the situation with Celsius and 3 Arrows Capital. And we've recorded this before Voyager, but you could apply it to the Voyager situation. I recorded an episode with a gentleman by the name of Parker Lewis last week that I highly recommend you go check out. It's about an hour and a half discussion, but we dive deep into the nature of this contagion event and how a lot of these services ended up in the spot that they did.
I'll make sure to put all the links to all that, what he just said, in the description below. So folks, just scroll down and it'll be right there. Once again, thank you so much. I appreciate your time, and we'll be talking soon. Hopefully when Bitcoin's a little bit higher.
Thanks, Matt. It was a pleasure.
Have a good one. Bye.
You too.